Hello, and welcome to our presentation. My name is Crystal Munoz.
Hello, my name is Julie Cundy.
We will be doing our presentation on the company Macy's, and we'll be doing the value line July 2017 projections. We gathered our data from Macy's current updated financial statements for the first quarter of 2017. We also found a lot of our data from Yahoo Finance. Macy's current stock price as of July 13th at the closing was $22.10. The high for 2017 was $34.82. The low for 2017 was $21.08. The PE ratio was 12.06. The PE trailing was 9.2. The median PE was 12. The relative PE was 0.46. And the dividend yield was 7.11.
For this upcoming slide, we have timeliness, safety, and technical ratings. For past value line, we have the timeliness of 2, safety of 3, technical of 3. For our 2017 projections, we estimate the timeliness to be 4, safety 3, and technical 4. Being raised to a 4 is not the good thing, because in timeliness it means that it is a lower rating as opposed to something positive. Next up, we have Macy's financial strength and earnings predictability. For the amounts of current and past years, we have the same estimates, financial strength of B++ and the predictability of 70. Now we have price stability and growth persistence. Currently, the stability is at 45 and the persistence is at 60. In the past, the stability was at 45 and the persistence was at 65. It means that it hasn't been fluctuating as much as you would think with the stores closing, which is actually a really good thing, and it tells us that Macy's is on the right track.
Macy's had sales of $21,352. We found this by taking the first quarter of 2017's income statement and taking the net sales and multiplying it by 4. Macy's currently has common shares outstanding of 304.5 million, which is an increase from the previous value line of 304.2 million. Macy's had sales per share of $70.12. We found this number by taking sales divided by the current shares of outstanding stock. This was a decrease of around $14 from the previous value line in April. Next, we looked at the dividends declared per share. This was found by taking the dividends divided by the common shares of outstanding stock. For this, we found it to be $1.51. This number was only slightly higher from $1.48 in 2016. The gross margin was 38.1%. We found this number by taking revenue minus the cost of goods sold divided by the net sales. Macy's is looking at a decrease for this next value line. Then we found the operating margin, which was 4.12%. This was found by taking the operating income and dividing it by the net sales. The operating margin, according to our numbers, is taking a sharp decrease and is going from 11.4% in 2016 down to 4.12% in 2017.
Next up, we have a continuation of ratios. Here we have income tax rate, which we currently estimate to be 47.4%. as opposed to the 37% we saw in last year's value line. This is calculated by the income tax expense divided by net income. This year we have a higher percent. It's not necessarily a bad thing or a good thing. It's not a drastic difference with all things accounted for. We can say that Macy's is doing just fine with this rate. Next up, we have net profit, which we estimated to be $284 million as opposed to the $1,210 million calculated during last quarter's value line. This estimate is very, very different from what was seen before. It's almost 1,000 million difference. The profit generated from Macy's sales is not very large, but if you do account the stores closing and everything else, then it is to be expected. Next up from this, we have net profit margin, which is a just a calculation of net profit divided by sales. We see this amount to be 1.33%. Next, we have return on total capital. We have 6.6%, which is calculated by net income divided by the sum of debt plus equity. This is different from what was calculated before on previous value line, which had the sum of 13%. This is a big difference too, but this also has to do with the smaller net income we had in the present quarter as opposed to past quarters. And then finally we have retained to common equity, which we have a percent of negative 4.1. This is actually a negative number compared to what we saw previously, which was 14%. And this was calculated by net income minus common dividends, and then this all together is divided by common equity.
Macy's continues to face tough times in the ever-growing internet e-commerce. However, Macy's continues to increase its investment in technology, which could prove beneficial for long-term health. Although they are facing difficult times, Macy's continues to push forward. Macy's has announced that it plans to close 68 stores. At the same time, the company is expanding its discount store offshoot, Macy's Backstage. It plans to open up another location in August. Macy's is currently looking to have a sustainable number of brick-and-mortar locations. The company also owns a lot of real estate and is considering many new ways to make it profitable. As the retail industry continues to suffer, Macy's may be able to push through with stronger online sales as they continue developing technological investment opportunities. Although many Macy's locations have closed and will continue closing, the company is trying to find the new adequate equilibrium in number of stores relative to the demand for brick-and-mortar stores customers seek. Macy's also pays regular dividends, which may be appealing for investors in the long run. Thank you for your time.